When is a good time to refinance? Can you still refinance? What things should you consider when refinancing? In today's video, we're going to dive into everything with regards to refinancing so that you can make informed decisions if you're considering going through that process. My name is Jeb Smith. I'm a real estate broker here in Southern California. I have a background in mortgage lending, but I don't currently do loans. And the reason I bring this up is because I don't have a dog in the fight. I am here merely to provide you with information so that you can make the right decision for yourself. I'm often seeing people getting screwed in multiple ways when doing refinancing. So I want to point out some of the clear things that you need to think about when going through that process. In addition to that, we're going to go over some commonly asked questions with regards to refinancing so that you have all the information you need in order to decide whether refinancing your mortgage is right for you. Now, when people think about refinancing, they often think refinancing so that they can lower their monthly payment. And when mortgage rates go up, it doesn't really make sense to refinance in many cases. And as we've seen over the last couple of weeks, interest rates have gone from the low 3% range upwards of 4%. And there's a lot of people out there that have mortgages or had mortgages that could have taken advantage of those lower interest rates and actually lowered their monthly payment. So it may not make sense for you to refinance right now if you're planning on just lowering your payment, but there's a couple of other times when it does make sense to refinance, and we're going to dive into those right now. The very first one we want to talk about in today's video is probably the most common, and that's pulling cash out of your property. Now, what does that mean? That means that you can refinance your mortgage to a higher balance than what you currently owe on the property and get that additional amount back through the close of escrow. So for example, let's say that you owe $300,000 on your mortgage, your home is worth $500,000, you could actually refinance with a loan amount of $400,000 that would pay off your existing loan of $300,000. And you might have some closing costs and that sort of thing involved, which we're going to dive into here in just a minute, but you have roughly $100,000 left. That money would come back to you through the close of escrow. And that's what a cash out refinance is. Now, one of the commonly asked questions associated with that is, what can you do with that cash? Well, you can really do anything you want to with it. A lot of people do home improvements. Some people do debt consolidation, pay off credit cards, pay off student loans, pay off different things in order to, take that debt out of their life, if you will. And in addition to that, you might take the money, put it in savings, have a nest egg. You might go buy an investment property. There's a lot of things you can do with that money. You're not limited on what you can do with it, but you do want to make sure you're doing it for the right reasons. Now, a moment ago, I mentioned debt consolidation. That means paying off credit cards, student loans, car payments, that sort of thing. And there's two ways to do it. One way is that you can actually do it through the loan. You can have the escrow company, the lender, actually pay off those debts through escrow. So you might be on the verge of being able to qualify for refinancing. Maybe your debt to income ratio is pushing a threshold where you can't actually refinance and take that much money out because your monthly debts actually exceed what the lender will lend. Well, you can actually pay off those debts through escrow and actually qualify for the loan in some cases. So in that case, the lender, the escrow company, will pay off those debts through closing. And in that case, you could actually do a debt consolidation loan through your actual refinance versus getting the cash out and paying it after the fact. Many people out there, if they receive the cash in hand, they might question whether or not they should actually pay off those debts. So in many cases, it makes sense to have the lender do it up front. And that way it's taken care of. You don't have to second guess it, and you get any additional remaining cash back in hand. The fourth time it makes sense to refinance or potentially refinance is if you're currently paying mortgage insurance. If your home value's gone up, you have 20% equity in your property, you're able to refinance your current loan, pay off the existing loan, and get rid of that mortgage insurance entirely. That could end up saving you quite a bit of money monthly. And that's a case where it might make sense. Now, don't get me wrong. You can actually stay in the same loan and not have to refinance and get rid of that mortgage insurance. But in that case, you're relying on your current lender to do an appraisal on that property and come back with a value that makes sense, that shows that you have the equity in the property to get rid of that mortgage insurance. And if you're waiting for your lender just to come to you and say, hey, you've got equity in your property, we're going to drop the mortgage insurance. Typically, most lenders aren't going to do that until you have at least 22% equity in your property from your existing loan. So they're not going to take into consideration the fact that your property value's gone up in many cases. They're going to wait for you to make that call to them or ask for them to do it. So if you're trying to get rid of the mortgage insurance early, it might make sense to actually refinance out of that loan into a new loan. And that way you can get rid of the mortgage insurance and hopefully lower your monthly payment. Now, before we get into the process of refinancing some of the commonly asked questions, the last thing we're going to talk about is if you currently have an FHA loan. If you currently are in FHA, you have mortgage insurance, a lot of times it makes sense to refinance out of that loan into a conventional loan if you have the equity in your property. That way you can get rid of the mortgage insurance. But currently, because interest rates have gone up, it may or may not make sense. One thing to do is take your current interest rate from your lender, add mortgage insurance for most FHA buyers is 0.85%. So if you have a 3% rate with FHA and you're paying 0.85% in MI, you essentially have a blended rate of 3.85%. So if you can't refinance and lower your rate to anything lower than 3.85%, it may not make sense to refinance in that case. And that's what we're going to talk about now. We're going to talk about some scenarios that you should think about, if you're planning on going through a refinance. The first one is that if you just lower your payment by a little bit, right? If you're not lowering your payment enough for you to actually see a substantial amount of savings per month on your monthly payment, then it probably doesn't make sense to do it. Now, my lender here in California has a formula. It's a magic formula, if you will. Nobody really knows how it works. If you take $125,000 and you divide it by your loan amount, that will tell you how much you need to save on an interest rate in order for the refinance to make sense with 0 points. Now, if you're paying points, you have to save more than that. So in my case, my mortgage is about $500,000. 125 divided by 500,000 is 0.25%. So I need to save 0.25% in order for a no-cost mortgage to make sense. In my case, my interest rate right now is 2.99%. So that means I would need an interest rate of roughly 2.75% for that to make sense when refinancing. Now, if you have a loan amount of $125,000, you take $125,000 divided by your loan amount, $125,000. That means you need to save at least 1% on your mortgage for that to make sense. Now, again, it's going to be a little bit different for each scenario, and you have to decide whether or not that makes sense for you. Now, if you're listening to this video wondering, who do you go to, where do you start with regards to refinancing or having that conversation, do me a favor. I've done the hard work. As I mentioned earlier, I have no skin in the game. I'm not a mortgage broker. But if you need an expert anywhere in the United States, do me a favor, click on this link below or go to this link. I'll set you up with someone that I know personally that does a good job, that is honest, fair, and will guide you in the right direction. Now, a moment ago, I mentioned it might not make sense to lower your mortgage or refinance your mortgage if you're just lowering it a little bit. What you have to do is you have to take how much you're saving per month and divide that into how much you're actually paying for that mortgage with regards to closing costs and see how many months it's going to take you to recoup your costs. Now, you might have some lenders out there that charge you no points, no fees up front, but you have to make sure you're looking at it correctly. When they say no points, no fees, but they're taking your loan amount, from say $300,000 to $310,000, and they're just packing it into your loan amount, you're probably still paying fees on top of that. So there's actually a way to determine how much you're paying for that loan, and that's if you look at box A on your loan estimate. Box A will tell you any fees that the lender is charging you to do your loan. Now, if they're not charging you any fees, that box is going to be blank, if you will. Now, you're probably going to have some costs associated with that loan, but they're not necessarily closing costs. They're costs like prepaid taxes, prepaid interest, things that you're going to have to pay on your mortgage, whether you kept it or you didn't. These are fees that are always going to be associated, with you owning that property. And now some people will look at them as closing costs when in fact they're not actually closing costs. So just make sure you're looking at box A on the loan estimate. That will tell you exactly how much you're paying for those costs. So let's say you're saving $200 a month, but it's costing you, $2,400 to do that loan. Well, that means it's going to take you about 12 months to recoup your cost, on the savings that you have there. So if you're going to be in the property longer than 12 months, if your goal is to keep that property forever, or maybe, keep the property for the next 5 years or whatever, then it probably makes sense to refinance. But if it's going to take you 4, 5, 6, 7 years to recoup the cost on doing that refinance, and you're not sure if you're going to be there, then it probably doesn't make sense to do it. Now, I often get people reaching out asking, how soon can I refinance after closing on my property? My property has gained a lot of equity since we purchased it, or, I bought new construction. It's gone up a lot in value. Can I refinance it as soon as I close? There's no time limit on when you can refinance, but there is a time limit on the new appraised value. Most lenders won't use a new appraised value for the first 6 months. So you're going to have your current loan for at least 6 months for them to use the new appraised value on that property. Now, if you don't need the new appraised value, then you can refinance as soon as you buy the house or as soon as you refinance. There's no limit on the number of times you can refinance, and that's another common question I get. How often can I refinance? As often as you want, but it's probably not going to make sense. Right? If you're getting the best interest rates out there, then it probably doesn't make sense to refinance every year or every couple of months. You have to wait until it actually makes sense financially in order to refinance. Don't be, a serial refier, if you will. Only do it when it makes sense. And that's what we addressed at the beginning of this video. If you're trying to lower your payment, you're doing debt consolidation, you're pulling cash out, getting rid of mortgage insurance, going from an FHA to a conventional loan. Those are times when you consider refinancing. Now, while we're talking about refinancing, let's take a minute here and talk about the process of actually talking to multiple lenders. It's okay to get multiple quotes. In fact, I recommend getting multiple quotes. Earlier in the video, I gave you a link to someone to talk to, but you should talk to someone else as well. Get multiple people's opinions and decide whether or not you're getting the best deal. In my experience, the two people that get screwed the most are the people that go with the very first quote and don't get another quote, and also the people that are out there trying to rate shop and they get 10 different quotes. It's okay to rate shop, but just understand the lowest fee, the lowest rate isn't always the best experience. So just make sure, when you talk to someone, you're asking the right questions, the things that we're talking about in this video. How much are you charging? What interest rate are you, am I being quoted? And if they can't answer your questions outside of that, right? A lot of people out there don't have the experience necessary to actually do a great job. So if you have questions and they're diverting or they're not answering them directly or trying to push you off or they're too busy, then you need to find another lender. Experienced lenders out there, professionals out there will take the time and guide you through that process. And while we're on that subject of talking to multiple lenders, it's okay to have your credit run by multiple lenders because you have 45 days from your initial inquiry to get multiple quotes where the credit bureaus shouldn't hit your credit. They should only hit it one time for the multiple quotes. So every time you get a quote within that 45-day window, it's essentially one inquiry on your credit for that entire period. So it's okay, again, to shop lenders. It's okay to get multiple quotes. But when you're doing this, make sure you're doing it in a very short time frame. Ideally, you want all of these quotes on the same day, if at all possible. Because if you get a quote today from me, and then a quote from some guy tomorrow, and we just had an invasion, where Russia invaded the Ukraine and it affected the bond market and interest rates dropped, there's a chance that their interest rate is going to be better than my interest rate, which is going to make me look non-competitive. But the reality is you got quotes in multiple days, and that was the big difference. So make sure if you're getting quotes, you're getting them within a short period of time. That way everything is comparable. And with that being said, most lenders out there should be within a very, very narrow range. Most people are probably going to offer you similar rate and similar terms. It's all about going the person that offers the best experience, the person that's able to answer your questions. If you get one person out there quoting way better terms, way better fees than everyone else, say you got 5 quotes, and there's one person that's significantly better than the other 4, red flag, right? Typically, everything's going to be in a pretty close range when talking about refinancing. And that's another reason that you want to get multiple quotes so that you know what you're getting is actually a good rate and good fees with regards to the process and how much they're charging. So hopefully that gives you a little insight into the process, some things that you should focus on if you're considering refinancing. Again, if you need an experienced mortgage expert in any state, look at the link below. There's no cost involved. I've done the hard work. These people are going to take great care of you, guide you through the process. But if you're still wondering, if you should refinance, what to avoid when going through that process, do me a favor, check out this video here. I talk about the mistakes to avoid. But for now, I appreciate you taking the time to watch. I appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.